Hi, it's David here with Future Trader. I want to give you some information on the NQ. Thank you so much for following Michael, Chris, ALW, Racer, Doug, and Buddy. Thank you guys for coming on board. I really appreciate you. And Payment, thank you so much for the kind comments, sir. I really appreciate the fact that you're here. Thank you guys over here for following. I'm unable to follow you back again, as I stated. Uh, TikTok is responding with some canned response saying that the frequency of me hitting the button is too often. And so that's why, they have, I guess, suspended my ability to follow you back. I asked them, can they clarify as to the specifications of how soon I should hit the button? And they have yet to respond to me back. So I don't know when I'll be able to follow you back. So you give me a follow button, and I don't supposed to hit it, and I guess within a certain time window, and I have no idea when that time window is. So if I was you, be careful how many times you hit the follow back button. So just be mindful of that. Now, I don't know when I'll be able to follow you back, but thank you so much for all the follows that you guys are doing. Thank you so much for all the likes. I believe that so many of you have liked the material, and I'm glad that you're doing so. Thank you so much for the follows. I really appreciate that. Now, I told you that 1455 is where they were headed in this video here. And of course, I kind of stated some information to you here, and I want to make sure that you understand that I'm not going to give you no elaborate intro because I'm not trying to entice you to be a trader, and I'm not going to ego trip for 30 minutes and only give you 2 minutes of information that you can utilize. I want to make sure that you are able to utilize some information that will show up on your chart in any time frame repeatedly every day. All right, so just want to make sure that you understand that I want a mature audience to follow me, and of course, support the work. All right, now timeless content here, most viewed videos, and I tried to put it together some of the information for you in real time. Some is not. There's your trend. There's your price action method. If you're winning, it's this. I'm trying to make you aware of it, and then of course, here's your chart scale. We'll get ready to load this section up with some real time. I'm gonna give you about 10 minutes of it today, and then yeah, trading guide here. The primary focus of the channel is these three videos. All right, so here's your trend. I'm sorry, price action method. There's your trend, and then here's your universal chart scale. And I gave you two other turning points in the market that you can look for as well, all within 40 minutes, trying to give you a strong foundation so you can get your trading to be consistent. All accounts traded, done 1,000 ticks in that trade right there. And then, of course, you can blow out a live account, and I think it makes absolute sense. And you can do it several times. And logically, I can explain to you why it should happen. Now, staying in your trade, of course, you need to be able to know why you need to be there. And then there's aspects of being a full time trader. I want to make you aware. And this is what I do off screen, knowing days and hours in advance where price should close would change how you trade. A succession of videos here, kind of before and after effect, if you want to see what it is that I'm capable of beyond the scope of the screen. Of course, there's a whole lot more, but that should get you started. All right, now this is what they did. Now we're going to focus in on the chart scale here. Again, about 10 minutes of information I want to give to you. This is the logic of why it should work, and I'm going to explain that to you. So this video is all about the logic of it. So here's the upper part of the scale, the center part of the scale, and the lower part of the scale. All right, so I want you to understand why it works. And then, of course, there's your trend. I'm going to just kind of scroll this slowly so you can kind of take it in just a bit. And then, of course, once they made the trend, I know it's quite a few lines up here and arrows, but I want you to pay attention to, where the trend is set. So here's your trend. There's the center of your trend. This trend was set here on this bar here. They all have to be higher, 7. There's the center of your trend, came back to the center of the trend, made a trend down and gave you the center of that trend, and they blew right through it. Now I want you to take a look at how that worked. Okay, so they came down, bounced off the center of the scale, blew that trend, and then they, of course, came back down again, played the backside of the upper part of the scale, ran to the center of the scale, gave you that trend, but didn't want to make the trend distance, turned around and with one fell swoop, just ran right back to the upper part of the scale and through that trend as well. Came down towards the center, gave you a little bit of a reaction there, gave you some support, and then boom, that's when we made that trend distance and almost made the one off the trend bar. So you can go off the trend bar or the center of the trend. You should be able to get at least 2 attempts to get that distance. All right, so you're not looking to take a lot of trades, just one that should work, or maybe 2. All right, so there's your trend distance, and then of course they made a trend down. Now, as you can tell, they ran down to the center of the chart, lifted up, hit the upper part of the scale, dropped down, and then, of course, played the backside off of the center of the chart there, and then they fell down to the lower part, and then they got up under it and just began to work their magic. Came back up, gave you a trend. Okay, so they gave you a trend up. There's the center of the trend here, or you can go off the top of the trend. I just put the line at the center of the trend because they were at the center of the chart. So I said, okay, well, here's the COT center of the trend. They should come back for you, but they managed to go just a little bit down, but not all the way, and they got halfway towards the trend distance there. Turned back around, hit the bottom of that scale, played the top side. Now, I want you to see they played the center of the scale after making the trend down. Here's the trend down, the center of your trend, center of the scale. All of it should line up. And then, of course, they went on and gave you that move to the downside. Now, here they gave you another trend, and then here's the center of that trend. Now you can go off the trend bar or the center of the trend. Anywhere in there should work. They moved down just a bit, and then of course they gave you that trend distance right at the center of the scale, made you another trend down, and then of course there's that distance there. All right, so now this is what they're doing. All right, so they're up, but I want to give it to you from a different view. So let's take this out of screen. This is the daily, all right? And I told you they'll go down to that 14.55. They haven't hit it yet, but they're almost there. I did tell you they may want to rotate up before actually hitting it. So they may come close, rotate up, and then go down and hit it, but they should wind up here. We got no close here, hard stop here, but if they want to do a little bit more, I think they're going to go past this. You definitely have a no close here. So if they get past this zone here, you're looking for them to hold steady right into this zone here and turn right back around and bring it right back down. Do they have to do that? Absolutely not. They can just end positive today, come back tomorrow, and just drop it right back into this zone and maybe even outside of it and keep going down. So come time for them to hit this 14.5 again, they already shown a little buy intent here, but again they may can come right back down into this zone. So they are going to come to the center of the chart. I really believe that, but if they want to stop here, that's okay too. Just want to see if they can repeat that same process. Now let's take a look at this on a 5-second chart, and I want to explain to you the logic. The reason why I pick a 5-second chart, because you'll see more cyclical turns here on this chart than you would on a 1 minute, because we want to hold this video just for a few minutes. We don't want to be here too long. It's all about repeatable behavior. All right, so now there's nothing in front of the candles. It's nothing in front of the candles here but those lines. Now, it's all about procedural knowledge. That's what I'm trying to really bring to focus here on the channel, is that everything that I've done over the years has everything to do with an official way of doing something, an established official way of doing something. When the doctor operates on you, he's going to operate on you the same way he'll operate on anybody. When you go to court, they have proceedings. They do the same thing. No matter who's standing in front of the judge, they're going to do the same thing. And so trading needs to be the same way. It's not a variation of different approaches you need to take to this. It needs to be the same thing. So when trading, the scale, when price turn, it's going to turn right in your frame. It's going to turn in front of you. It's unavoidable. You absolutely see it happen. And so these lines are projected forward, has nothing to do with price right now. Now, when I scroll it forward, you can take a look at price and see how it responds to the levels. But if the market is going to turn, it's going to turn within this frame. And so if that being the case, there's clearly places where it would need to turn. And it only makes sense that they turn, if it's a tug of war, let's just say it like this. If it's a tug of war, and let's say you got buyers on this side and sellers on this side. Well, whoever can pull whoever across that center of that line there, well, that's who's going to win. And so we make it simple, and that's what trading really should be. It should be something simple, something that you can quantify. You should be able to say it should be able to do this over and over and over again. It has nothing to do so much with what's in hindsight. I'm trading this hard right edge, and that's why I scroll the candles forward, backwards, so you can see the forward, side of the hard right edge. And there's nothing here, but the price will respond to these price levels, and that's the logic of it. All right. So center of the scale. If you're playing tug of war, buyers and sellers, if you do it just off simplicity, if they come to the center of the scale, you're looking for them to just go right back up. And even the more so, if you're winning, if you ever play tug of war, if you're really winning and you can see you're pulling your opponent across the line, it tends to motivate you even more just to pull even harder. And so when they're way up here above the upper part of the scale, it just kind of makes sense that price would, continue on and kind of accelerate. Now, of course, there's no infinite number that it's going to travel without RTM, it's going to come back at some point. And so if it's going to do that, we can again just look at it as tug of war. So we will go from the middle of the scale to the upper part of the scale here. And then, of course, this becomes the tug of war location. All right. So tug of war takes place here. Let's keep this thing pulling in this direction, or let's drive it back this way. And so it has nothing to do with the left. There's nothing to the left that we're seeing within frame. So angulation, the chart is up. And so you look at it, there's nothing there but that line. And so it's in front of you. So you're able to trade that hard right edge with confidence and know if there's a chance that it's going to turn around and go back in this direction. You're looking for that location to yield you something of a response. Can it get here and just blow right through it? Yes, it can. And so all you would have to do is just gauge what happens here. And so with the trend, if they're going to trend down, okay, 1, 2, 3, 4, 5, 6, 7, center of the trend, see if they'll give you that distance, and that would put them right about here. If not, if they can get past the center of your trend, then yes, they should just absolutely keep going. But if not, here's the center of your trend. Let's see, can that trend distance show up down to here? And then here, once they get here, I believe they'll get past this because they'll be trending down. And so they may overshoot your pivot here. See if they'll turn back around, because we're still looking for them to stay bullish in some regard because they're in the upper part of the scale. And so even though they cross here, which can get them somewhat bearish, it can, we just want to then look at the chart in full view. And so we will go from the bottom of the scale to the top of the scale. We would then look for this to become important. Okay, so if they can't keep this in play, okay, then yes, we'll be looking for them to maybe dive into here. And then I guess at that point, we'll see whether or not they're able to commit to it, or will they get stuck right in between this area and just kind of play the back and forth with the sellers trying to be dominant and force them, to stay near the center here. But let's see. Okay, so we almost got a trend distance here. Let's see if we can get that done. So that's 7. Let's see if they did that trend distance. Let's just see. And again, this is all about simplicity, being able to pull up the chart and immediately say, hey, what is it that they can do? What's the possible chance that they may want to do this? Now, are they about to build a trend back up? Yes, 1, 2, 3, I believe 4. Yep, they back at it. All right, so they kind of did that really fast. They didn't quite get all the way there, but I'll still count it as a trend. So 1, 2, let's go 3, 4, 5, 6, 7. So that's a trend up. And let's see, can they commit to doing that trend distance even further? Coming down to the center of the trend. This chart is just moving really fast here. All right, so they came down roughly about to the center of the trend. Trading do not have to be hard, and I don't want you to think that it is. Trading professionally, this is what it looks like. It's monotonous, it's boring, and so sensationalizing it makes no sense at all. And so let's see if they can get to that trend distance, and then I will let you go, and we'll just add this to that section. Let's see if they can make it. They got halfway. I thought that they could get past that. Thought that they would. Trend distance suggested that they'll end up down here and pass it, man, but they didn't. All right, so they almost got there, and I believe that, well, I think they can probably get it all the way to the top. Let's see if they can do that. Let's see if they can do that. Let's see if they can do it. They're almost there. They got really close. Let's see if they can do it. Let's see. Yes, that's the logic of it, though. That's why it works, because we're using what's already here. The market is going to turn in front of you, and so if they're going to turn in front of you, I can pretty much bet you, that it's going to happen right in these locations. It is. And so, it's no need to, I guess, look left all the time. You can do it, if you want, but sometimes just consider the simplicity of trading. That's all. It's simple. It's not complicated, but it's all in how you interact with it. I'll say it that way. You can make it complicated if you interact with it in a way that's not repeatable. So you want to be, there you go. So you want to be able to do procedural information and establish or an official way of doing something. All right. So you want to make sure that you're doing that. All right. So I wish you all the best with your trading. Take care.